Welcome to TradeTheMBI.com. This is John's reports for the 7th of March. And, well, coming off the big move, we had attempt to drive it a little bit further, but that started to sell off fairly quickly. Magenta still leading here with the MBI, but red literally has eclipsed it again. So that poses a little bit of weakness. You do have the strength of midterm buyers here in green crossing over science. So shorts pretty much just vacated the scene, but short-term buyers may be a little out of steam here, just as we're getting to positive on the shakeout. And that becomes relevant because when you get a dip below and you come positive on the shakeout, you can't afford to have any dips from there because that will express some significant weakness if it does take place. Puts us right above the 61% Morganacci line again. Likelihood of a return back to the 4,008, still decent, but at this particular point, you have nothing but positives. NASDAQ looks much stronger from that standpoint. That beautiful DOC dip of orange below red, signaling the push, and then, of course, green crossing over. But again, we look for any kind of spider effect, which would be the green pivoting down, cyan coming back up, forming that little Black Widow effect kind of triangle, and sort of like over here, only inverted. And again, short-term buyers also fading here to start the day. Now it's early, so we'll see. But it's interesting because the NQ is below where the NASDAQ, the NASDAQ here is below that key algo level, whereas the S&P was above that 4,008 algo level. So that's a little bit of a disparity. Interesting. I think that really points out that the S&P caught up a little bit and maybe has moved just a bit past where the NASDAQ is to even things out somewhat. TLT still back over 100. Crazy given where rates should be with the current interest rate, but also reflective of the amount of demand for treasuries now and people just flocking to that safety. And it makes a difference. And no surprise here, oil continuing to rise. And you would think, oh, that's a bonus for the economy. That also potentially is going to drive additional round of inflation, particularly if this continues to move like it should. And most of that is about dollar debasement and purchasing power. And again, these commodities will rise in relation to that, even if there are supply gluts and excesses. So that's just something to weigh on. Gold flat just a little bit right there and showing an MBI white, so it could express a little bit more weakness, which would make sense given what we saw from this shakeout here. When we dip that low, we expect the move coming back up. We'll have a shorter dip and then boom, make its next run. So that was the early move of it. From a euro standpoint, they're still pumping. It's still right in the comfort zone as long as they're above that 104 and between that 111. I think they're all comfortable with that, despite whether or not the euro is really even worth that, given the economic states in the EU in general and their debt. Comparatively may not be worse than the US, but the reality is everything commodity-wise is traded in dollars, not in euro. So what do you need a euro for other than if you're in the Eurozone? Begs the question. Bitcoin still below its key threshold there and still with the expressed MBI white leading. So, but it wouldn't take much of a turnaround at this particular stage. It's getting kind of low right here at minus 59 on the red. Blue also well below significant levels, which just usually that's where you get your turnaround pops. So something to note. And ETH mimicking it a little bit stronger, I think, simply because the white is MBI is much closer than the magenta, but still no pivot up at the magenta. So there's still potential for a move further down to the 61% range. And of course, my TS gave me issues once again, as usual. So if I get those intraday charts up, I'll express them on the Skype chat. As always, though, trade well. We'll talk to you later.